The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. Thanks for tuning in. Start your trading day right here with me at TFNN on the Morning Market Kickoff. And is inflation back? We're going to find out what the market thinks about this. Right now, though, you have the S&Ps down about 30 points from where we were trading. This morning, producer price indexes. You want to see the headline? Rise the most in 3 years. Now, it is on services, okay? But yes, you're talking about a number that's up 0.9% from a month earlier. Folks, that's a percentage in 30 days. The largest advance since June of 2022 when inflation was rocking. The PPI up 3.3% from a year ago. Services increased 1.1%, the most since March of 2022. Margins at wholesalers and retailers jumped 2%. Machinery and equipment wholesaling, okay? Goods prices, excluding food and energy, rose 0.4%. You jump over to where the Fed is, and this is not the holy grail, as I say, but we looked at these numbers yesterday in terms of the odds of a cut for September. Highly likely, to put it lightly. 94.5%, okay? That number was 99.9% yesterday. So you had a 1 in 1,000 chance yesterday. Now you got a 1 in 20. It was a 1 in 1,000 chance that they would not cut in September. Now it's a 1 in 20. That is quite a shift, even if it's still a little bit of a tail risk. Now, on the flip side of that, you go out to December, and the market still thinks there's a likelihood that we get 3 cuts by the time we get to December. But you better be watching this data, folks, because that is quite a leap, and the market is paying attention today. Now, you jump over to the 2-year. Yeah, we got lower price, and you got higher yield on the 2-year. All right, hold on 1 second for me. Here we go. So you have the 2-year dropping right now, down about 2 basis points. We get the 10-year still at 4.25%. Okay, I'm going to bring up the yield curve right now to take a look. So you jump over the 10-year. We back off, lower price, higher yield. We're sitting right now at a pretty reasonable 4.25. But we take a look at this yield curve. You got the 2-year at 3.72, higher by 3 basis points. Okay, the 10-year higher by 1 to 2, but you see, it's the 2-year. We're higher by 3 basis points. Now, 3 basis points, folks, you know, when the market was really shifting on some of the jobs number, right, you had the 2-year dropping by almost a full quarter point. Okay, we're up by 3 basis points. So let's see how the market interprets it. But guess what? If you see this data, the market's going to need more data, okay? PPI does not always translate through to CPI. It doesn't always translate through to PCE, which the Fed prefers. But you got to put it on your radar, folks, okay? Because from a commonsensical standpoint, if you take politics out of things, tariffs are a tax. For the longest time, taxes were a burden on the economy, right? They didn't cause growth. They detracted from growth. Somehow that's like not going to matter because there's so much greatness going on. In the back of my head, I feel like that might matter eventually. You know, doesn't have to. Okay, there's other forces in play, of course. But boy, you get a number like that with PPI rising 0.9%. The estimate was 0.2%, folks. You talk about a juggernaut to the upside, man. And yeah, you're talking about year over year, 3.3%. They were looking for 2.5. So in a 30-day span, the prior number was 2.3%. They thought it was going to edge up to 2.5. We just went to 3.3. Core PPI, 3.7. They were looking for 3. Now, again, PPI in terms of the totem pole, right? PCE is what the Fed prefers. CPI, much better than PPI. But PPI is the first component that can trickle through. And if there's going to be a lag, it would make sense. It would show up in the PPI. And we're going to see how much the market reacts to this today, as we are coiled at all-time highs right now, almost across the board. S&Ps, we hit 65.02 last night. We take a look at the volume in this market. So S&Ps reach a high, and check out the volume, folks. Okay, in the futures, it's one of the lowest volume days you've done in the last couple weeks, really, when you make that high. Now, you did have some decent volume on Tuesday to get above those highs, but still not like, look at Tuesday volume wasn't even above the volume of July 7th, right? We're making highs with and the volume is just not quite there on the S&Ps. You jump over to the NASDAQ, and we actually couldn't break that high. But again, you look at the volume we had from August 7th. NASDAQ, you do 557,000 contracts. You do 481 on that thrust higher, and we do 448 yesterday. All right, let's jump around to some equities right now. You got NVIDIA shares down about $1.50 in the pre-market. Yeah, everything's going to be a little bit lower today. You're going to see a little fear in this market, folks, because that is quite a PPI number. VIX right now spikes from 1450 to 1514. Jump over to AMD from 184 to 180. Paramount Skydance after the volatility yesterday, about 10 pennies lower to 1490 right now. Warner Brothers Discovery was participating yesterday to a certain degree, slightly in the red so far this morning. Look at Amazon rocking higher on that. Amazon up by $1.50 right now in the pre-market. Oof, this thing has caught a bid. You jump over to Microsoft. Microsoft in the green. Look at the divergence going on some of these equities, right? Amazon accelerating higher this morning in a market that's a little bit worried about potentially on that PPI news. All right, we'll jump over the banks. Yeah, all a little bit lower. Look at this. Citi down to full dollar. JP Morgan lower, Wells Fargo as well. All right, we take a look at some other equities that are moving this morning. John Deere with their numbers. Going to be a tough day to have some negative numbers. They're down by about $33 right now. And yeah, they slightly miss in terms of their forecast in net income of about $500 million lower. So they originally were going to make, it's $250. They lower the top end of their range. Their forecast, $4.75 billion to $5.25 billion. Previously, they were going to make up to $5.5 billion. So now they see the cap at $5.25 billion. And yeah, if you're not pushing those prices over to the consumers, where are you pushing it to? You're pushing it to margins, man. And, you know, to speak to that report that Goldman Sachs put out last week, margins are everything, right? These tech companies, the reason why they're trading at the multiples they are is because of margins, okay? Good companies, they pass off their costs to the producer or the consumer. They don't eat it themselves. Look at that trade on Walmart yesterday. There's a very real chance, folks, and that's what you see. You see companies like John Deere, right, trading lower. Why? Well, why? They're not passing on the costs. They're eating it in terms of profit. It's going to be a constant battle on those prices. And we're seeing it play out a little bit in PPI. You're going to need some confirmation of those PPI inflation numbers, though. But boy, the stakes just got raised for future economic numbers when you get a beat like that. 30 days, folks, 30 days. 0.9% versus 0.2%. So we'll see. We got the S&Ps off 23. We'll take a look at some equities. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We get the S&Ps down about 24 points right now, trading at 64.64. So S&P's off by 0.4%. NASDAQ 100, pretty similar, 0.4. Dow right under that at about 0.3. And the Russell, you rode it on the way up, you ride it on the way down. Particularly volatile when you're talking about rates right now. The Russell off by 29 points or 1.25%. Now, the Russell just traded up 115 points, folks. That was more than a 5% acceleration from the beginning of Tuesday till the end of Wednesday. Not even 48 hours. 2 full trading days. Okay, and we're giving back 1.25% today. Bitcoin as well. Crypto, the ultimate growth right now. Did we make it there on Ethereum? Oh, didn't quite get there. You're talking about getting within $77 of an all-time high, and pressure's going to be back on the downside, man. The ultimate growth stocks, right? Ethereum already about $300 off of the highs of 48.25 as you have everything ripping lower on that. Crude, not the case, up by 1.5%. How about a 61 handle yesterday? Crude trading at 63.64 right now. You jump back to gold. So gold, well, what's happening, right? You have a little bit of a rise in yields on the fact that maybe we're not going to get all the cuts as quick. That will play out over time. A rise in yields, that gives the dollar a little bit of a lift. Back above 98, and that's causing gold a little bit of a pain this morning as you have gold down about $7 right at 3,400 on the dot. All All right, getting back into those numbers. So I mentioned that PPI is not CPI. CPI is not PCE, right? But folks, unemployment's at 4.2% right now. Market's at all-time highs. The jobs report's in focus. The Fed is worried that we're losing jobs. Okay, 3-month average, 35,000 jobs. But unemployment's still at 4.2%, and you now have producer prices rising at almost 1% on a 30-day period. Now, some of these components in the PPI that we just got, okay, you can make a leap in terms of where you go from there to the Fed's preferred measure of inflation, the PCE, okay, personal consumption expenditures price index. Quite a mouthful. While healthcare categories came in soft, and healthcare is a huge component, I'm trying to see if I have the charts in here, and I will find the chart. And I've shown it before in terms of the bar chart, talking about PPI versus CPI. I'll pull it up again. I got to find the article I was looking at. Healthcare is a huge one, but what else is in here? Okay, airline passenger services, portfolio management, both of those jump in. The latter, portfolio management, expected due to a rising stock market, but nonetheless, you got components of the PCE rising. Okay, food prices accounted for 40% of the advance in final goods costs, largely due to veggies. A less volatile PPI metric that excludes food and energy, talking about core, and trade services also rose from a month earlier by the most since 2022. So there are some pockets, to say the least. And at the same time, you have the Treasury Secretary coming out and calling for a 50 basis point cut in September. It's going to be interesting to see if those dueling mandates become a problem. Now, you know what the biggest problem is, folks? Stagflation, right? We have a weakening job market right now, and we have producer prices rising by the most in more than 3 years. Keep your spikes up in this market, folks. You know, you're riding this out longer term. Yeah, the economy's fine. Okay, you might take a little volatility. In the short term, the NASDAQ 100 just traded up 45% in 4 months, folks. Did you hear me? I'm not talking about cherry picking some tech stock. I'm talking about an index of great stocks that just traded up from 16,460 to 24,068. Almost 8,000 points from a 16,000 base, folks. Okay? You better believe that you see some numbers like this. And the other side of this is that it's in services right now. And even if you don't think it's going to mess up the inflation and the interest rate method, in terms of maybe inflation isn't pervasive enough where it's not going to slow down the Fed, especially with the pressure on from Trump and putting in a new chairman. Very reasonable to think that. Say, nah, we're going to be worried about jobs. When it comes to inflation, they have the ability to, and that it is a legitimate case, right? You want to be cutting rates when times are good so that you have the ability to hike. You want to be cutting when times are bad, and then you have the ability to hike. Just in the same way, we were so low for so long when we were at zero that people were making the case you have to hike because things are going great. And if we actually have a real problem that the Fed needs to cut, they're not going to be able to cut. So yes, they're making the case, right? That no. Jobs are in trouble. The Fed needs to cut right now. If there becomes a problem in the future, then you can go the other way. That's the purpose of the Fed. Very reasonable. Let's say that you are on that camp and you say, okay, the Fed's going to cut. Fed's going to cut. Market's pricing in. They're probably going to cut 3 times this year. Okay? And let's say you're right. Let's say this PPI number is a bit of a misnomer, okay? And inflation does not become pervasive. Maybe we settle between 2.5 and 3%. Maybe that's what this administration wants. I could see it. I was joking with friends yesterday saying, you know, what's wrong with 2.5% inflation if we're going the economy at gangbusters? It's almost a win-win. The only one it's not a win-win for is for savers, folks, right? The part of the variable that closes that equation is that companies have to eat the costs. That's the only way it works out, right? Either producers eat the costs, but they're a company, usually higher up on the chain, or the company actually selling you it eats the cost. If it's not going to come into inflation, it's going to be in the margins. So best case scenario, you now have producer prices that are up almost 1 percentage point in 30 days. And if you're making the case that they're not going to translate through to consumers, and believe me, there is pressure on these companies not to raise prices, or you'll get the full assault from the president, most powerful man in the world. But that means that you may have a margin problem. You're seeing it in John Deere today, right? They're revising their profits, and you're going to drop $33. You're going to open at about $4.80, and we're going to be chopping around, and you're talking about highs back here on the election of $4.63, and you were right at $4.80 in January. So the pressure is on right now to see if they translate through, and we're going to see how the market reacts in 3 minutes when we come back, folks. We got the S&Ps off by 26, NASDAQ 100 off by 114. We're coming back, folks. We'll take a look at some other equities. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and you got an S&P off by about 20 points right now. NASDAQ 100 off by 80. We're going to see where the day brings us. Digesting a little bit of hot PPI. On the 10-year, lower price, higher yield coming at you right now. The 10-year off by 7 ticks. We're almost coming back to right where we were prior to that Tuesday, before the numbers you got on the CPI. Pretty remarkable. The ebbs and flows of this market. You jump over the 2-year right now. Yeah, continuing to move right now. The 2-year, I mean, that's only a move of 3 to 4 basis points, folks, in terms of higher yield, but that's a decent move on the 2-year. Not quite back to where we were prior to the CPI, though. Look at this. Amazon catching a bid up by 1.4% so far this morning. You jump over to Meta shares, only down by about 0.5%. We check in on the chip stocks. NVIDIA, back to yesterday's lows, off by 1%. You jump over to AMD, off by 1.75%. All right, check this out. So the Journal's got an interesting one. 401ks, this market, I actually found it interesting that the people in equities is this low. So the headline here is that Americans' 401ks are more tied to stocks than ever, even in target date funds that shift from stocks to bonds. More is going into stocks. Yeah. So workers in their late 30s had 88% of their 401ks in stocks last year versus 82% a decade earlier. Well, part of this alone, right, is that your 401k has blown up. I mean, in the NASDAQ 100, folks, it's up 45%, your stock portfolio from where it was 4 months ago, okay? But no matter where you look, but this is a fact that stock markets have risen, okay? You have the 401k investors in their early 60s. Stocks were 60%, up from 57. Not that big of a difference, but still higher nonetheless. Now, there's one more I wanted to get to in terms of where they're setting it. Here it is. So at the end of last year, the average equity allocation for workers in target date funds just beginning their careers was 92%, up from 85% in 2014. Folks, if you're just starting your career, I would encourage you, and I am not a financial planner, I'm not a financial analyst, and this is and do your own research and go seek out, okay, when you're talking about your retirement funds, and that is where you need to minimize risk, okay? But if you're starting out your career, I'd put your 401k in stocks. That's it. I would put it in stocks. It's not going to kill you if you put it in some fixed income. But even at 92%, you're telling me you don't need 8% in there? I'd put it in stocks, man. That's it. You're that young. You don't need the fixed income of your portfolio. And I know that there's those that, you can disagree, but hey, and realistically, folks, just go put it in an index fund that's a very low fee if you can. Get it out of the highly managed, highly fees if you can within those 401k plans, okay? Equity allocation. Yeah, you're actually going down on the under 25. Not sure what that's going on there. Let's see. Yeah, and if there is a time, though, to take it off, it would be right now. That's the thing. If you're going to lighten up diversification, go do it right now. Okay, sell your equities at 6,500, get some fixed income when you're locking in, 5-year CD ladder right now is almost 4% locked in. That's not the end of the world, but just a blanket statement that you're putting almost, but nonetheless, man, 401ks, pretty remarkable, those sums as they rise. All right, market holding up pretty well right now. So we got PPI, which is the big data point this morning, but you also get jobless claims. Edge lower. Continuing claims, though, remaining elevated. Okay, look at that continuing claims, right? So initial claims, slightly lower, 224,000. It's a healthy chop, right? We've been here. We've been here since 2 years, folks. Okay, there's no rise in initial, but that's not the case when you look at continuing. So what's happening? People are getting laid off. There has not been a rise in the people getting laid off. It's the people finding the jobs that are laid off. Okay, continuing claims fell to 1.95 million. But yeah, you've been chopping around at the highs for the last month or so. You made it up to 1.97 on the last number, I think. 1.95 is the number we just get for August 1st. So talking about Fed, and we're going to hear this for the next month or so, or however long it goes. Summerlin, he's in the running, and he backs a big interest rate cut. Well, if you're in the running, folks, you better back a big interest rate cut. I think we all know that. So he got a call telling him there's going to be a list, and he's going to be on it. That's as much as he knows. He's waiting for guidance. And yeah, you're going to hear that as the campaigning is on, man, to be the next new Fed chair. We could easily do a 50 basis point cut without disrupting anything at all. So it seems like pretty much a no-brainer to me. Well, isn't the point of doing a 50 basis point cut to disrupt something, right? But hey, that's quite a line. I'm sure Trump loved that one. And folks, I was doing the numbers yesterday, man, okay? On the show. A 50 basis point cut. Now, if it's priced into the market, yeah. And look at these home lenders, man. You know, I think, so let's take a look at these home builders. Lennar, that was quite a day on volume, right? Look at that volume yesterday. That was a real breakout, man. I think I'm going to look to test the 120 here on Lennar. You come back down, you test this, you do it on lighter volume. That'd be a nice buy. They're setting up. D.R. Horton. Yeah, not quite the same buy-in. D.R. Horton gets 5 million shares. You get a couple big days out here, the biggest from their earnings about a month ago, July 22nd, and we're off by 1.9%. KB off by 2.3%. Decent volume yesterday. No, excuse me. Not even as much as the day prior. Lennar's looking the strongest right now. It is. The way you had that volume yesterday in Lennar, percentage-wise, D.R. Horton well off the lows. Maybe 150 on D.R. Horton. The last time you had volume on August 1st. But you better believe there's going to be a disruptor, man. You know, you're buying a $400,000 house and rates drop by 50 basis points, and you're buying a $400,000 house. All of a sudden, you can afford a $450,000 house instantly, overnight, same payment. Same payment. Yeah, they drop at 50. Now, there's already cuts priced in. So we get a 50 basis point cuts. Mortgage rates aren't dropping 50 basis points. They could drop 25, though, because there's not a 50 basis point cut priced in. There would be disruption, folks. That's the whole point. You can argue for the disruption, but to say that it wouldn't matter, because you gotta. So imagine you have producer prices rising at 0.9%, right? What do you think companies are going to do if they know that people have access to equity, to refinances, they can buy more houses, they're going to have the ability to raise prices more? That is the worry on the other side of it. We'll see if it plays out. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets digesting hot PPI, and yeah, digesting it pretty well. We're only off by 17 points right now. We're basically sitting at all-time highs across the board. NASDAQ 100, right back to where we were at about, 2 a.m., something like that, so no real huge shock at all. But you do have a little bit of a give back in terms of what we saw yesterday, right? The benefactors, where you were getting some rotation in terms of the Dow, in terms of the Russell, people probably coming in this morning saying, maybe that rotation was a little quick. What if we don't get all those cuts? Because, there's no pullback whatsoever. You got the Russell right now down 1.4% on that number. Bitcoin off $5,000. That's a 4% drop. Ethereum, 4% drop on the dot as well. Crude trading at 63.53. And, gold trading lower as you have yields rising and you have dollar strength with the dollar pushing 98.11. We're at 97.62 just yesterday. All right, you jump over to Apple. Apple higher by about 0.2%. And if you got an Apple Watch, the blood oxygen tracker, it's coming back. It's returning to the U.S. It's amazing how long these take place. I remember when it happened. It was 2 years ago, right? That the patent infringement lawsuit, Massimo is the company, and the U.S. Customs injunction. But after a legal battle, it's going to return for Apple Watch owners who bought models with the feature disabled, right? So they had a feature, it's disabled, it's going to come back. The feature's restoration comes as part of a new iOS. It includes a workaround that shows the data on an iPhone rather than the Apple Watch blood oxygen app themselves. Right? They loopholed it, folks. We're good. Following this update, sensor data will be measured and calculated on the paired iPhone. The results can be viewed in the respiratory section of the Health app. It's a result of a U.S. Customs ruling. And you got to ask if there was any pressure on the Customs ruling. So that's a matter of the Customs ruling. And with Mr. Tim Cook showing up in the Oval Office, nonetheless, you jump over to Apple, slightly in the green right now, up by 0.2%. And that just could have been a years-long legal battle. We know how those play out. But look at Amazon, man. Amazon. So is this same? Yeah, I don't see if anybody's got any news on what's driving the Amazon action this morning. You got an acceleration in a big way, man. You're up by 2.6% right now. See. Yeah. Take a look at Amazon on a daily. So we got highs out here on a weekly basis at 242. You do 244 million shares. You sell off. We have a 319 million bar, and that's the bar from their earnings in July. And remember, the worry there was AWS, right? I talked about it, man. I think they were growing at about 17%. Azure was growing at like 39%. Now, there's been some easing of tensions here on the retail side as well. Yeah, it's going to take a lot to get over these July 28th numbers right now. The high there is 236. We're trading right now. Big day for Amazon, though, up 2.25%. You jump over to Oracle. This thing's been on a heck of a run. Yeah, quite the pullback yesterday for Oracle shares. They're cutting some of their staff. The market a little bit worried about that. And today we're actually, so you've seen the reversal, right? The Russell's getting slammed. The equities that got slammed yesterday, like Oracle, actually up 0.6%. So maybe a little bit of a reversal of the rotation that you were getting yesterday, actually. Paramount Skydance giving back some of that. Folks, if you, short term, if you have this equity, yeah, you better be watching it like a hawk. Longer term, if you have this equity, I think the long term premise, like I talked about, is pretty solid for this company. UFC alone, they're going to make so much money off that UFC deal, man. So much money. $1 billion a year? Not a lot of money when live sports is everything. And, you know, you think about what it would cost to get any type of deal with some of the big networks, the big sports leagues, right? $7.7 billion for 7 years of exclusive distribution in America. And I'm not even a huge UFC fan. And even I'm like, man, that's crazy. That is quite an asset to control. All right, so this one just hitting. Yeah, so Ulta and Target. That's going to be, yeah. So Ulta Beauty, sorry, it was just hitting. Ulta Beauty and Target, they're going to conclude that partnership next year. Boy, so that is a shift. As somebody that is not into Ulta, but yeah. They have mutually agreed not to renew their joint shopping experience when that agreement ends 1 year from right now. Ulta Beauty at Target shop-in-shop partnership is going to continue in stores and on the website until that, so it'll be in there for the next year. They launched in 2021. It gave Ulta a way to expand its customer base. And yeah, as somebody that goes to Target all the time, we're talking Target, Darth. And it's quite a presence that they have in their stores there. So somewhat interesting to see, as that is a dynamic shift. I wonder what's going on in the C-suite there, as they're completely abandoning a pretty, maybe it's just not bringing in the traffic they thought. There's a lot of components that go to that deal, of course. You got Ulta down by 1.4%, and you got Target right now down by 2.4%. A lot going on. Target with PPI numbers factoring in as well. Walmart flat right now. Jump over to some of the big box. Costco flat as well. Let's take a look at some of my favorites. TJX, right in the middle of its channel. We're trading right now down 0.4%. We check in on Mickey D's, down about 0.5% right now. And the dogs, look at this run. Now, we got a little bit of meme mania going on in Kohl's, okay? So be careful. On a weekly basis, the meme mania started the week of July 21st. We're still higher, and you're getting a little meme mania this week. Paramount, Skydance, etc. We're down by 4.3% for Kohl's right now. In Meta. All right, markets are finding a bid. Oh. Hopefully you're there, Al. Let me know. I lost you for a split second, but we got Google right now, up by 0.5%. And these markets are climbing, folks. It's going to be interesting to see if it can shake off the negative prices, especially because yields have held. Right, it'd be one thing if the whole reaction reversed. But right now, yields, they're going higher. The 10-year right now is down 7 basis points. You jump over to the 2-year, 7 ticks. Not basis points, folks, ticks. The 2-year up about 2 to 3 basis points right now. Not a huge move, right? We're just back to where we were after the CPI, but nonetheless, giving back some of those gains. And you got a little bit of dollar strength, trading at 98.14. All right, we might be green by the end of the show. NASDAQ 100 just off by 7. S&P's off by 10. One more segment, folks. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we caught a bid on the open right now with the S&Ps only down by 10. We were as low as 64.55 initially on those numbers. For a hot PPI, we're back to 64.77. But as our man Basil Chapman says, coming up next, the day is young, folks. Basil coming up with the Tiger Technicians Hour next. And don't forget, Basil did an outstanding webinar, folks, this week. You can check out the opening call on the front page of TFNN. You sign up for that for a month. You get a 30-day money-back guarantee. You'll gain access to the 90-minute webinar that Basil did this week. I watched every minute of it, folks, live. Outstanding webinar from Basil. Check that out on the front page. You got some time this week. You got some time this weekend. Check out that webinar. It's available on your members page for all opening call subscribers the moment you sign up, folks. Check it out. All right. We jump back to gold, under a little bit of pressure right now with a stronger dollar, down by $12. We jump right now to silver, down about 1.1% for silver. We check in on copper this morning. Let's take a look at the daily on copper. After that tariff volatility, just building a base until the next move. You drive down on volume. Copper, pressure to the downside right now. You check out some of the copper stocks. Southern Copper, down by 2.1%. You check out this thing on a little bit of a longer-term basis. Now, that was a nice breakout. Maybe that's your bid, but you did it on no volume, okay? Right? You trade lower. You want to see the exact reverse. If this volume had been different, I'd say, man, this just broke out of its downtrend channel. There was your test. You accelerate on? No, you accelerate on no volume on Southern Copper. So be careful of those copper stocks. FCX, another one. Look at this stock, right? Big time selling on tariff volatility. Okay? Last week's bounce, paltry volume. To say the least, you're down 2.1% right now. Amazon making a run, man. Apple, flat right now. We jump over to Tesla shares, negative by 0.7%. All right, folks, stay tuned. We got Basil, as I mentioned. He's coming up next with the Tiger Technicians Hour. Steve Rhodes, live at 11 o'clock. We have Fast Market at 12. Larry live at 1, and I'll see you this afternoon. Thanks so much, folks, for starting your day right here. Have a great day. Stay tuned. Basil's up next. Thanks, folks.